From freelancer to entrepreneur, when to transition to a formal business entity. The journey from freelancing to entrepreneurship can be challenging as it is exhilarating. But with our help, you'll be able to navigate it with ease. To start with, let's talk about how the roles differ. Freelancers usually work independently for various clients on a project-by-project basis. On the other hand, entrepreneurs run a formally structured business entity. Having a formal business is a great way to establish credibility, create brand awareness, grow, and upskill yourself. It can also impact your taxes. Once you're in corporate, you aren't taxed the same way as an individual employee, and you have access to tax breaks in the form of credits and deductions that can improve your bottom line and grow your business. At the same time, because there's a separation between individuals and some business entities, you can reduce any risk to your personal assets if you face legal trouble. A formal business structure can also help you access credit and funding. But how do you know it's the right time to make the transition? If you are struggling to keep up with your current workload, are turning down jobs, or constantly need to hire subcontractors, it might be time to make the switch. Subscribe to our channel to stay informed about the latest tax and accounting news and resources. Once you're ready to start a formal business, you can choose the best entity structure for your needs. And there are a few entity options to choose from. For example, there's a single-member limited liability company, SMLLC. They're easy to set up, and because they're disregarded entities, business income is reported on your personal tax return. Or you might consider a partnership. A general partnership is a business started with at least one other person, without legally separating yourself from your business, and it doesn't require filing any paperwork with your state. Limited partnership has a general partner and at least one limited partner or passive partner, who has no managerial authority but is usually a finance backer who shares any profits. There are also C corporations. They offer limited liability protection and have a flexible ownership structure. On the downside, the entity is subject to double taxation, once at the corporate level and again when shareholders take any money from the business. Finally, there is the S Corp. These are ideal for those who don't want to go public or attract institutional investors. They have a capped number of shareholders, only one class of stock, and one level of taxation. Once you've decided your entity, you'll need a business plan. This outlines your goals, objectives, and overall vision. It also lets you make strategic decisions, attract investors, and pinpoint your company's strengths and weaknesses. Another aspect to consider is budgeting. Your budget is a roadmap for financial planning, allowing you to allocate resources, manage cash flow, and make good decisions. Remember to budget for the unexpected, like an emergency fund that can act as a buffer for expenses such as repairs or legal fees. Finally, you need to handle the legal and tax considerations. You need to ensure you have a registered business name and EIN, Employee Identification Number, from the IRS for tax purposes. You also need to have any state or local licenses. All of this requires accurate and detailed records. You will also need to know about tax laws and deadlines, as well as what you need to report on your returns. Tax pros like the team at Fusion CPA can help you with this and so much more. Our tax and accounting services ensure that you have a great financial strategy in place to make running your business completely stress-free. Schedule a discovery call with us today.